Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Joining me today are Deepak, Bharti, Senior Portfolio Manager at Invesco, and Rob Simnick, Senior Investment Trader at Invesco. And we're going to discuss the AT1 bond market, the challenges in liquidity and price formation due to the concentrated nature it has, and the advantages of using an exchange-traded fund to access the market. Deepak, Rob, welcome to the show.
Thanks, Dan.
Hey, Dan. Thanks for having us.
So first of all, what are AT1 bonds and what are investment managers actually using them for?
AT1s are a special type of COCO bonds, which essentially are hybrids. They have a Basel III requirement to be at point of issuance designated as additional tier 1 bonds. In short, hybrid bonds, which are contingent convertibles.
Investors tend to be more income-seeking mutual funds, hedge funds, private banks, insurance funds are not typically involved in AT1s due to their greater risk nature with US Treasuries and the lack of defined flows and maturities. We see a lot of Asian accounts that are restricted on preferreds, so they'll go after AT1s. It's a much more global market with a larger account customer breadth than some other products.
Very good. And then how are liquidity, price formation and volume in the cash bond market for AT1s?
It's about $1 billion a day in AT1s versus, IG Corps overall, which is 20 billion. From a dealer standpoint, the books are often shared between the London and the US market making desks. Some dealers stop trading the product on the European close. So for us in the US, it's always busy the first few hours in the morning and then it'll die off.
How does the ETF work and what does it capture?
Our ETF, AT1 LN, is the largest AT1 ETF available in the market. It captures the USD denominated COCO bonds. It captures over 80 issuances and 22 issuers, but we target the most liquid bonds. So the issuer size is important. The total issuance by issuer should be over 1 billion, and each individual issuance should be over 750 million. The issuer rating would be around A negative, whereas the issuances rating would be BB+. So the benefit that the investors are getting is purely from the subordination, and the Z spread we are talking about currently is around 350 basis point that investors can capture.
And then what are the challenges in investing and trading in the AT1 market?
AT1s almost always have call features and resets based on futures rate moves. These combined with the yield and dollar price make them particularly sensitive to US Treasury movements. So it's a challenging time for that market right now.
Okay. And how does the ETF support trading and investment management?
On the ETF side, in the process of creation redemption, it could be cash or bonds, which is in-kind creation redemption process, which really helps the market provide additional layer of liquidity.
Mm-hmm.
In general, the market makers and the authorized participants have sufficient liquidity. Even in the turmoil last year, we did not see significant issues managing or trading AT1 bond ETF.
Are there any barriers for investment managers or traders who might want to trade ETFs today?
Because it is, a smaller subset of traders that are focused on it, that provides its own set of challenges. But although it's a small set of eyes, they're very sharp and they're on the market all the time. One of the things that we do here at Invesco is we're really good at collecting that market data, collecting those bids and those asks in that market color. And what I find is the AT1 product has a much more complete set of data because you have those traders that are very focused on it. So when we go collect that information, we can paint a clearer picture of how to trade it than other larger products.
What Rob mentioned was more from the bond perspective. From an ETF perspective, we have some solid market makers, authorized participants who maintain and manage liquidity. Contrary to if we were talking about an investment grade ETF, whereby most of the creations are in kind. In AT1 mark creation redemption, we do see a fair amount of 50-50, I would say, in kind versus cash creations. And thanks to Rob, our executions have been pretty impressive to support the creation redemption process so far.
So how important is the role of trading in supporting the investment management process in delivering this product?
It's absolutely critical. In particular, AT1s are traded out of US and some part of it's traded in Europe. But it's absolutely critical for trading to be able to support that product. Otherwise, to navigate the illiquidity in this market could be very challenging.
The approach we take is multifaceted. Depending upon the size, you're going directly to a trader and talking about a trade, negotiating a price. In the case of, larger flows that are more spread out over more bonds, which is often the case for our ETF product, sometimes we'll use, an electronic OWIC or BWIC using one of the more common trading platforms that you see out there. But the third way that we've been doing it, which is new and not very common, especially for this product, is we've been successfully doing portfolio trades for the ETF, and that's worked out very well. I would say it continues to be one of our competitive advantages as a firm and for our AT1 ETF.
That's excellent. Guys, thank you so much. That's really interesting.
Thanks, Dan.
Thanks, Dan. Thanks for having us.
I'd like to thank Deepak and Rob for their insights today, and of course you for watching. To catch up on our other shows, or to subscribe to our newsletter, go to tradietv.net.